All right. Hello, everybody. It is Wednesday, and Leon and I are coming to you live from Invest in Education Academy. So today we're talking about the top sectors in 2021. It has been a reasonably bumpy ride so far this year. So we figured we would kind of talk about some of the sectors that have been top performing. And while Leon tells you why we chose that topic, I'm going to do some housekeeping.
Yeah, so keeping with the theme of, since we're midway through the year, last week we talked about kind of where the market stands in general. If now's the time to kind of assess where you are, look at some of your maybe your underperforming stocks, maybe take some profits, maybe look to deploy some more money, some dry powder if you have any. So just kind of keep with the theme of we're halfway through the year, we have another 6 months to go. Let's see what's working, right? Like what has worked. What has worked the first 6 months of the year that has worked well, and when I looked this up today, I was kind of shocked at what is leading the market higher, because looking at, when y'all see the slide, I can pretty much bet most of the folks that follow IEA are not going to be in many of these, because I know I'm not in any of the leading sectors so far this year. I'm in one, but you'll see in a minute. But so just basically recapping. Okay, what has worked so far this year? It's nowhere near what I thought. I thought coming into this year, technology, because technology's been the beast the last 5-10 years, and then on top of that, solar has been has led technology even more over the last 3 to 5 years, and neither one of those are in the top 5. And I'll let you know where tech is in that, but the top 5 is neither one of those. It's been a bit surprising what's leading, but I'll kind of explain why that is. And Brent, when you get a chance to throw a slide.
Yep. And before I throw up the slide, I wanted to say we look like we'll be having another Panther joining us pretty soon. So we're working on that. So we are definitely growing, and we're up to 14, actually 15 now. Crypto bulls. So that number continues to tick up. So again, I say if you are interested, we have 9 slots left and 10 slots left. So yeah, make today the day. You let us know if you're interested in joining, especially with what's happening in the cryptocurrency marketplace. It is completely upside down, and a lot of people don't know what to do with this market. Our phone call on Monday was all about how to position yourself in this particular cryptocurrency marketplace. And most recently for the Panthers, we had a real estate investor present to us about 2 weeks ago, roughly. And this guy had returns of 20 to 25% for the investment he was offering to us. So if you all are interested, understand we're doing a lot more than just stock and crypto, and we're looking at real estate. We're doing private equity deals. We're doing some VC work. So inside of Investing Education Academy, there's a lot to be had. So I'll go ahead and share the link now. But again, if you are interested in joining either the IEA Crypto Bulls or our Panther group, you should get in contact with Leon or I directly. Send us a direct message. And for anybody who's wondering, if you become an IEA Panther, it includes the cryptocurrency group, the IEA Crypto Bulls. The Panthers are our highest level, and those are also the people to whom we do private investments with in our own little secret bat cave. So let me share this. All
right. So what we have on the screen here is the Brent, can you kind of move it over? Well, I don't want to say make it small. I don't know how people can see, because you're on my side, your box is kind of covering the top right, but I don't know how it'll look on the video. But anyway, I just don't worry about it. I'll explain it. So what we're looking at here is this is a line chart, and it's called a year-to-date chart, right? So it's taking the returns from January, I believe January 4th through today. And as I said, what I thought was going to be the leading markets are not the case. And this goes back to show, as Brent and I say, we're not gurus. We don't know everything. We know, we know a bit. We don't, what I expect to be leading the market so far is not leading the market. But also we're in a very topsy-turvy year with the pandemic, interest rates, the Fed, a lot of crazy things going on in this market. This is a market I've never seen act like this before in life.
Yeah, and actually though, Leon, if people have been tracking this, we've been talking about retail for at least the last probably 4 lives, and some of the picks being in that retail space. When we've definitely talked about the fact that with so much money being pumped into the economy, there was going to be a lot of people who just end up indulging in luxury goods, fashion, and yeah. So we definitely want to give ourselves credit because we have talked about retail, and we did talk about energy as well, and not directly, but one of the reasons we talked about bringing more people into our real estate space. And for those that don't know, we're going to be adding real estate investing to the IEA platform very soon, because we did talk about the fact that this market is probably going to see a boom while everybody else thinks it's in a bubble. And also internationally, we still see the real estate marketplace is doing pretty well.
Yeah, true. Yeah, I mean, retail, based on the pandemic last year and everything shutting down. Yes, retail we looked at as one. Anything that dealt with people's individual spending money, retail, shopping, travel, hotels, all that. Yes. What they call consumer discretionary. Yes. However, coming into the year, these are not the sectors I thought would be leading at all. But they are. It is what it is. They are the leading sectors, and I'm going to kind of explain why. So as I explained the chart, so the way the chart it's a line chart. It's starting from January 4th of this year through today, and these are the returns of the top 5 sectors. Now at the top is oil and gas exploration, and that blew my mind when I saw that. But I know that so the third one down here is energy, and oil and gas and energy they're kind of one and the same. And the reason that is during the pandemic, so the top 3 on here, so the top 3 are oil and gas, retail, and energy. And the real reason behind why those are up is because of the pandemic, right? Like everything shut down completely. We all stopped driving, airlines shut down, so the demand for oil and fuels and natural gas kind of went away, right? Now that we're back, all the world economies are coming back. People are then now shopping like crazy, and the demand for oil and gas is picking back up because we're all driving again, we're flying again, things like that. So the first one is oil and gas exploration. And exploration means the companies that actually go out there and actually mine for these particular natural resources. So if you're in oil and natural gas stocks, you've seen a very nice return, or if you're in the ETF itself. And also on the chart here, next to the name, those letters in parentheses, those are the ETFs. So anybody that want to maybe go check out some of these ETFs, or maybe get some exposure to these spaces, definitely go do your research on these particular ETFs. Because they invest in a basket of these different stocks.
Yeah, and for those who are just checking in with us, an ETF is an electronically traded fund. It's essentially it's a mutual fund that trades like a stock. So just for anybody who maybe heard the acronym but didn't know what it meant, that's what an ETF is. Again, what Leon said, it's a basket of investments that relate to this particular sector, which essentially spreads your risk. Helps you diversify while still investing in a single investment. And it's pretty much just a traditional mutual fund now traded like a stock, electronically traded fund.
Yeah, and a lot of these will have anywhere from 10 stocks. Some have upwards of near 100 stocks. So when you buy the ETF, you're essentially getting a piece of all those different companies, and you get crazy diversification really quick just by buying one stock.
Yeah, traditional mutual funds normally just give you a difference. If you're like, okay, you said it's like a traditional mutual fund, maybe you don't know what a traditional mutual fund is. So a traditional mutual fund is pretty much what Leon just described. It's a basket of investments. It can range from 5 to 200, depending on the type of mutual fund it is. But the difference between an ETF, electronically traded fund, and a traditional mutual fund will be the fees. Some of the mutual funds have what's called CDSC fees, contingent deferred sales charges, and they also have 12B1 fees. So those fees will be different. And then, of course, they have the term normal operating costs. When you're looking at ETFs, they normally are less expensive. It's for the investor, they're less expensive normally. And instead of a traditional mutual fund trading at the end of the day, which means it just receives a number of requests all day long. And then it only trades at the close of business on that day. So once the market is closing down, that is when the fund is transacting all of the requests that came in throughout the day. So ETF is going to trade real time like a stock. So you can go in and out of the market intraday. So those are the biggest differences between a traditional mutual fund and an electronically traded fund, which we refer to as the ETF.
Yep, and all like I said, everything those letters inside the parentheses, those are ETF symbols. So if you want to go look those up and do your research, they're here for you.
Yeah. Quickly, for those of you all who are listening to the podcast and you're saying those letters, the letters are for oil, gas exploration. The ticker symbol is XOP. For the retail sector, the ticker symbol is XRT. For the energy sector, the symbol is XLE. For the real estate sector, the ticker symbol is XLRE. And for the home builders, the ticker symbol is XHB.
Yep. Yeah, go. Because if you just listen, you're not seeing. So the first one is oil and gas. Like I said, again, demand has come roaring back for natural resources, and especially energy, oil and natural gas through the roof. I mean, I know a lot of people may or may not actually follow oil, the commodity oil, but oil is near $70 right now. And most of these oil and natural gas and the XLE energy, they essentially follow what oil does, the commodity. So oil right now is things like near $75. I believe during the pandemic, it dropped to, I don't know, like the 40s, maybe even the 30s.
I think it was
so it's been a huge movement. Huh?
I think it was high 30s.
Okay. So
actually, you told me that.
Yeah. Well, yeah. I mean, that's what I kind of remember, but I don't have it on top of my head. But a huge move in oil, right? So these energy stocks are typically going to follow oil. And again, the reason why oil and gas exploration is up is because the demand for that resource is now back. And then now these companies need to actually go out and mine and find the oil and find the gas to, supply, all the energy that we need. So that's the first. So the first one, the biggest mover, the biggest sector that's up this year is oil gas exploration, ticker symbol XOP, and it's up 48.14%, almost 50% in 6 months. Second is retail, ticker symbol is XRT, as Brent was saying earlier. It's up 41.29%. Like I said, and again, retail is another kind of a reopening play, right? Everything was shut down last year. I mean, everything almost not went to zero, but everything just dropped off a cliff. And now, a lot of these retailers are saying they're seeing pre-pandemic type numbers. I know the cruise lines are saying they're seeing bookings now that are higher than 2019. So, and there's all this money we saved over the last year and a half in the pandemic. So all this money is being driven back into the economy, and retail is seeing a huge boost right now. And that's hence that sector is up huge. Third one is general energy. So this is going to be like again, the first one was oil and natural gas explorers. Those people that companies actually go on and dig for these commodities. And then energy XLE is actually covering stocks like ExxonMobil, Chevron, British Petroleum, the companies that then take that product, then refine it and actually turn it into usable gasoline or usable liquefied natural gas that companies use then for actual energy. So XLE is third. Energy is the third highest at 31.77%. Not only said retail is up 41.29%, which is number two. Now the fourth one being real estate. This one I never thought would be up because all of us last year knew that companies were abandoning their offices, right? I thought real estate was going to go into the tank for years. Not the case. A lot of these companies now are calling their employees back. They're giving employees, some companies are giving employees the option of doing part-time, maybe 2 or 3 days at home, and then the rest in the office, or vice versa. And some companies, like I know a lot of the Wall Street companies, are saying you have to come back 5 days a week. So the whole notion that there's never going to be offices again, everyone's work from home, really isn't the case. And the real estate market is seeing that now. So the ticker symbol, the ETF symbol for real estate is XLRE, and that sector is up 25.01% in the first 6 months of this year. Again, I never saw it coming. Actually, I never saw any of these really coming outside of retail, but energy just makes so much sense because energy almost went to zero, and now it's coming back, like with gangbusters. And finally is the home builders. Ticker symbol for that is XHB, and that makes sense, right? Interest rates are at near all-time lows, and there was a lot of people that moved around during the pandemic that fled cities to the suburbs and out in the country. So there was a lot of real estate demand during that time. And now that we're kind of back, a lot of people are moving back into cities. And I know a friend of mine, Brent and I have a friend of ours, Brandon, who's also part of IA. He and his family did that. They lived in New York City. They relocated out of state, and now they've gone back to New York City. So we know of a personal case of someone who actually left and then came back into a city. So the movement during the pandemic was huge away from cities. Now the movement kind of back, or at least kind of quasi back to closer cities is equally huge. And also with that, a lot of people also are moving out of state, and they're moving out of state permanently because of remote work now. So I saw something the other day that Hawaii had a program where they were paying for people's flights for people to come there and work, I think for like a month or two to kind of fill out the island. And in the article I read, I think like half of the people that went are now staying in Hawaii and, looking for places to buy. So the home builders market it actually never really went away. Even during the pandemic,
yeah,
it was strong. And then after it was strong. So home builders are up 21.84% through this first 6 months of this year.
Yeah, and for everybody listening to the podcast or watching this live, the thing that you need to just take away from this is the fact that there's always a bull market somewhere. And even when we necessarily
where'd you get that from?
you know where I got it from. So it always is. And it's just a matter of, number one, finding it and believing that it's true. And there's always a market somewhere that's recessing. It's a bear market somewhere. And, we try to like dance around and avoid it. And sometimes doing that dance can cause you to miss out on taking, the ride up. And, sometimes you got to take that ride down. But just understand the market is still growing and segments in the market are continuing to grow pretty much regardless. And it happened in the pandemic. It was a pullback. March was like a, bloody month. April was like we were getting Band-Aids. But very soon the market exploded, and those that stuck through it, they reaped the benefits. So we hope this information finds you well, and you can go back to your portfolio and kind of see what's in there. But also, we don't want this information to cause anybody to panic. Like, oh my gosh, I have to get into these sectors. Do your homework. Make sure that this information, although it may sound amazing right now, that it makes sense for you, because next year, these may not be the top performing sectors. So just make sure whatever you do your research, make sure it makes sense for your portfolio, and make sure you're not using money that will cause your family harm if you weren't able to do well continuously.
Yeah, and these, like I said, I know I'm only in one of these sectors, which is real estate. I have some stocks there, but generally these are ones that I was not banking on doing this in this year. So I'm way underweighted in a lot of these, and I know a lot of people that follow us and follow IA and IA ecosystem are a lot heavy in tech, right? So I'll give the tech number. The technology sector is up 10.5% this year. So I mean, if you look at technology relative to energy or oil and gas explorations, it's way underperforming. The top sectors, even underperforming retail. The S&P 500, which is considered the general market, is up 10.84%. Right. So tech right now is kind of in line with the general market. But these sectors here are the ones that are way outperforming the market. And these are ones you may want to look at, right? So if you're heavy in tech right now, maybe you want to take some profits in tech, or if you're looking to maybe deploy some more money, definitely take a look at these 5 sectors because they are absolutely killing it, so far this year. Will that be the case in 6 months? We have no idea.
Right.
We have absolutely no idea. But again, it's just information to bring you all. Then you again, do your own research. But this is where these are the hottest sectors right now, 6 months into 2021.
All right. And so we owe you all 2 of our picks. Now, Leon, are we going to put the picks into the group? Like we know, like our new thing?
Your call.
Okay. We're going to put our 2 picks inside of the IEA group on Facebook. So if you're listening to our podcast right now, you're like, oh no, where are the picks? If you go to Facebook and search Investing Education Academy, our group will pop up. It's free to join. So please feel free to join. If you're listening right now and you thought, oh no, feel free to go over to the IEA Investing Education Academy Facebook group, and we will be posting our picks in the Facebook group. And, we want your questions. So if you have questions about it, ask. If you want to just kind of peruse some of the posts in that group, There have been some great conversations in there. We've done a couple posts in there, and we welcome if you know a stock that we should be looking up. Let us know what it is, and we'll spend some time checking out that stock as well. So, with that being said, we definitely thank everybody for being with us. We will be back next Wednesday, and feel free to continue to check out our podcast at IEApodcast.com. We are now approaching almost 700 unique downloads per month, which is amazing. And that's strictly because you all have been sharing our podcast with your friends, families, and coworkers and other. So thank you for doing that. Please continue to do that. And don't forget to subscribe when you go to the IEApodcast.com site. Subscribe. We're on pretty much all the major platforms. And if you have questions, comments, let us know. Thanks a lot, and we will.
Just say one thing. For all IEA membership members that are part of the IEA platform, IEA membership platform, of course, as normal, our picks will be posted there tomorrow morning, as like normal.
Yep, and we also have a running list inside of our membership community of all the stocks that we picked since we've started picking them. So feel free to peruse and see if it still makes sense for you, because the market changes, things change. Everybody have a great day, and thank you for basically being with us.